Trading Market Technicals morning call video for Friday, June the 7th. Markets did get a retracement rally. Dow up 80, NASDAQ up 22, Russell up 11. We did get that short covering rally as anticipated, and that's really all it was a short covering rally here. Today is non-farm payrolls due out at 8:30. Highly anticipated report, especially after the FOMC. Ben Bernanke spoke a couple of weeks ago, stating that he's going to possibly pull in the reins of its asset purchase program. So we're going to see what the reports are going to entail. Now, let's read into this for a little bit. If we get a real good number, I think the markets are going to sell off, because that's just going to put more evidence that Bernanke really needs to reduce his asset purchase program, because the economy is chugging along and is recovering. So if the numbers are terrible, believe it or not, I think the markets will rally big time, and saying that, well, Bernanke is going to have to hold off on his pulling in on the asset purchase program and continue QE. So that's what I think is going to happen. Believe it or not, I know it sounds crazy, but that's exactly what I'm looking for this morning. Now, if the markets are even, let's just say, non-farm payrolls are in line, slightly up, slightly down, I think the markets still rally today. It's Friday. It's going into the summer months. I do think the markets are still overextended and still due for a little bit more of a retracement rally. And again, looking at the NYMO here, I do like the fact that we're getting up into the -50, -40. That's where I like to see. Here's the 20, the Bollinger Band. Here's the 20-day moving average in the Bollinger Band, right up in this area here, and then fail. We're going to look to put some shorts on. I'll show that to you in the charts, but I wanted to show you the NYMO, how excellent it is. If you don't follow it, you should be following. And even if you're a day trader, it's important, because if you know that the markets are oversold, and if you're looking at certain indicators, I like looking at the VIX, I like looking at the vol spread, VOL, SPD, and I like looking at the tick, intraday tick during the day, and that gives me more of an internal. And of course, I look at all of my my sectors as far as the transports, copper, Russell, because these are good gauges of looking for market divergence intraday. And if you're trading intraday like that, and you're looking for something like that, it gives you a good clue to say, hey, you know what? I'm got to anticipate a bounce here. I'm not looking to get short. Let me just wait and see what happens. Problem yesterday, if you are waiting for it, it came really quick. Markets went sideways pretty much most of the morning, and then just dropped for an hour. So if I'm the type of guy that if the market does drop, I need a back test. I need some sort of a little bit of a rally for me to get short, especially if you're already down 3 bars, daily bars on the daily chart. I'm not looking to just put on shorts just to get short. And that really didn't happen. The market just sold off pretty much. And then all of a sudden, at the end of the day, we just rallied out of nowhere. So tough, quick. You had to be really quick, and if you had to basically close your eyes and get into a trade, and that's not really what I like to do. I like to put risk at as minimal as possible, and I like to put my my probability at at a high number here before I'm looking to get short anything, especially down at these areas. So anyway, another reason why, take a look at our this is our Japanese yen. Yen higher, market lower, bottom line. Now, the yen has gotten decimated because of Bank of Japan intervening with their currency, as you can see. But again, it's revision to the mean. As you can see how S&P rally, yen sold off. Now we got a bottom in the yen, top in S&P. Clearly, if you're not looking at the yen intraday, you really should be. It's very important. And also, the Nikkei, if the Nikkei index is rallying, then obviously the yen is falling off because it's risk on. It's the same thing with the S&P. It's highly correlated with the S&P. So big move up, heavy volume to the upside, and now we have a big, large candle above the 50-day moving average. Does it go straight up? No. I do think that the yen will probably kind of flag, take back half or maybe even all of it back to the 50-day moving average. But I do think that this is a possibility of a trend change. Now, we do have pretty much last couple of weeks that we've been rallying, so it's not just a one-hit wonder. We have been rallying, but now we're breaking out of this downtrend line. So keep an eye on the yen, guys. Very important. Okay, and if you see the yen higher, look what happened to the dollar. Dollar just got decimated. So dollar got really smoked yesterday, right into the 200-day moving average, sitting at the 81.07 area. So let's see what happens with non-farm payrolls. It will definitely affect the dollar this morning, that's for sure. Copper didn't break out of our pennant formation. It tried a couple times, failed miserably yesterday. So I was looking for some leadership out of copper. It's holding up well, believe me, it is holding up well, but it hasn't really breaking out like I wanted to. If you're a bull, especially if you're a bull in the market. Okay, take a look at the VIX. Want to show you that. Now, this could give us a buy signal, at least a short-term buy signal for a couple of days in the market. But in a little bit of a longer term, meaning a couple weeks out, I still feel that I'm looking to short the market here. Today will be, if we get back, we went out of the band yesterday. 2 days ago, we closed back into the band, producing a buy signal for equities. Again, today is you have a highly anticipated number, could be skewed today, so I wouldn't look into too much into what's going on for today. But if we do get a good a number, meaning a number for the markets to rally, then I think that you're going to get a buy signal in your VIX, and we're going to rally for a couple of days. But here is why I say that this is different. Okay. There's a lot of things, indicators that are saying to me that, yeah, okay, Mark, we have rallied, and then we bounced, and the markets rallied high, and the markets continue to rally. Yes, but I think this is a little different, and I'm going to tell you why. The emerging markets are selling off. All of the emerging markets worldwide are starting to sell off. Europe is actually very, very weak. So if everything else is selling off, it's only a matter of time before U.S. equity sell off. It just can't be the only driver saying, okay, we're totally isolated from everybody else. That's not true. It will happen. Just a matter of how much longer does this sell off. Now, if they redeem itself and start to rally back up, then of course the U.S. markets are gonna revert back and then look to get long again and look to rally itself along with the other markets. But you have to realize that. Now, here's another reason why I look at stocks above the 50-day moving average. Now, those of you who see the videos every day, you see I point this out, and also the stocks above 200-day moving average. The sell-off here for the last couple weeks has been selling off deeper. So stocks have been selling off, making lows, breaking above the 50-day moving average quicker and harder than any of these little movements here that we had all year of 2013. So this is why I'm saying from this move to this move, this is deeper than this move. So I think that stocks are breaking down below the 50-day moving average and the 200-day moving average faster. So you're having more sellers coming into the market this time at these tops. Okay. Now let's take a look at the tick. Here's the end of day tick. The tick. Now, this is a little early, but I want to just show you that every time when we broke down, we had a real nasty sell-off here. Boom. And right in here, we broke down the zero line, we had a sell-off. And then same thing here, and that was abbreviated, and here as well. So now, the thing is, we had a little bit of sell-off here, and the markets rallied. Touched it, dipped below it, came right back up again. Now, we dipped below it, and now we came back up again. Now, this is going to be, the next 2 days is going to be really interesting. Because if we start to roll and we start holding below zero, then I could tell you almost that the advanced decline, the internals, the market internals of the market is telling us beware. This is different. This is a different sell-off. So a little early, but I just want to point out, let's be careful here. And also the reason why I also point out, not just for day trades, but we do have a lot of people that are long-term investors, position traders, and swing traders that follow the videos, and I like to cover all angles. Okay, now let's go into the charts. 50-day moving average, S&P cash bounced right off it. Literally hit the lower uptrend line, literally to the penny. 1600, boom, we hit it, and now we back up. So we did tag the 50-day moving average, right, on a lot of these, a lot of the sectors. We talked about this on Thursday's video. So where did we go? Now I'm looking for that bounce back up to the 1635-ish area, even in the 1640 area, and then fail. And when I mean fail, that I want to get a reversal candle just like this, red, roll over, and then we look to put on some shorts. We don't want to be shorting in the hole here, right? So we want to know that is this trend now actually confirming its trend? Yes. So we did get the trend lower. We got a few days down, had some volatility. Now let's bounce and get really a weak bounce and short into resistance areas, and that's what you want to be really looking for high probability trades. As you can see here, Spiders Daily, same thing, head to 50, and also remember that confluence area of support I mentioned on Thursday. If you knew about that 160-ish, you could have bought that and really had a stop just below with 20-30 cent stop, you would have made some real good money on this if you really were paying attention and looking for these levels. That's why I give these levels to you guys, because it does work. It does work. Technical analysis does work. Spider 60-minute. Here's the downtrend line I'm watching. Here's a little descending triangle which you broke down from. So now, where do I look for? Well, I like the symmetry with the moving averages. Now, if I pull this off to the side, we have the 50 period moving average. You can see that is just lines up beautifully. The 200 period is right underneath there on top. This should cap this rally right up in here. So my areas right now are going to be right in this area, 164.25. Give it 164.50 to start looking to short the spiders. Okay, that's going to be the area. So just keep that in mind. Now look at if you look at the indicators below, MACD, stochastics, rolling off the bottom here. So right now, our indicators are pointing higher. You know, now we're looking at higher because we bounced. We had a short covering rally at the end of the day. But just keep that in mind. So we're looking for an opportunity to short into resistance. That's going to be, might not be today, guys. It might be tomorrow, Monday or Tuesday. But let's just keep that in mind. Diamond, same thing. Bounced off the 50-day moving average, bounced off the horizontal support, and now we just barely got above this long-term uptrend line. And our head and shoulders in our IYT. And if you notice why I mentioned head and shoulders, we had that about a week ago. We did break. That is confirmation of bearish setup. And now what am I looking for? I'm looking for a back test into the 112 area and fail. And then we look to, that'll actually confirm what I'm seeing in the equity markets. When you have a leader breaking down, everything else is going to follow. And here's the IWMs. IWMs did a good job holding up yesterday as well. And didn't get quite to the 50, but close enough now that we back tested. And here you see that little bear flag within this big rising trend line, this big rising channel. So again, guys, keep in mind this is you see the theme here. 50-day moving average bounced off, and the same thing goes for a lot of the other sectors. Now, Goldman holding up really well here. I like Goldman on the long side, to be honest with you. I mean, if this market holds up and we have another big bull flag holding on the 20, nice big bottoming tail here. I mean, this looks pretty bullish. I mean, you take out yesterday's high, we could be into a nice little move higher for today. So we're going to be watching Goldman on the long side. But again, we are still have a bullish symmetry. Okay, we definitely broke above this horizontal area, downtrend line, and now we're looking for flags. See, we have another bull flag right here, as you can see here. Another bull flag, and that's the theme really in this thing. So this is what I'm looking for. We have one big bull flag into another small little flag here. So Goldman looking long today. XLF did really well, holding above. Didn't quite get to the 50, so that's a stronger sector. So if the markets rally, you know, today, you want to be looking for some of the strong banks because we didn't even get close to the 50-day moving average. So banks holding up well, again, because of the yield, what's going on. Apple really took a beating yesterday. I mean, Apple at one point was down about $6.50, $7. Again, that's why I say, guys, this is really just a trading stock. Now, if Apple took out the 455, you take a run to the 470 easily, I would imagine. But now that we're starting to break down here, Apple needs to recover quickly. Otherwise, if we lose that 50-day moving average, we're gonna definitely test this area, this little confluence area of support, 418. As you can see here, the downtrend line coincides nicely with this horizontal area of support. So if we lose this 50, expect a 422, 420 test. And then lastly is the Qs. Okay? All right, guys, that's really it. Definitely be on your toes today. This morning is going to be quite interesting to see what happens with non-farm payrolls. I'll have a big report come out on Monday, more of the big picture. But this market definitely looks a little different than the last pullback that we had. So I'm really looking to, in the shorter term, in the next few days, I'm going to be looking to short the market, but not right in this area here today. If anything today, let's see if we get a little follow through for tomorrow and possibly get some bullish setups for the morning session. Have a great day, everybody, and really enjoy the weekend. Have a great weekend, and we'll speak to you on Monday.